Have you thinking about getting a random off the internet, some Facebook group to fund your next deal? Think again because Gator lending flat out sucks. Here's a full breakdown on better alternatives for your next deal. Let's get fair up it. So why Gator lending isn't your best option for a down payment gap? If you've had hard money deal lined up and you're short on the down payment, Gator lending probably came up as an option, the Gator method. Before you go find a private investor, some random off the Facebook groups, and hand them a lien on another property you own, walk through the 5 other ways to close that same gap, all of which are faster, cheaper, and way more reliable, guys. We have people coming to us every single day, almost tears rolling down their face because the Gator lender, the private money lender, pulled out 3 days before closing. No skin off their back if their financial situation changed. Hard money lenders will not allow a second lien on the deal property they are financing. That's if they're professional, of course. If it's a side hustle, some smaller shop, they might do these deals where they'll allow a second lien just to get a deal over the line. The gap gets covered privately. A private investor, a Gator lender, steps in to cover the shortfall instead. And I feel sorry for them because it's a risky place to park your cash, second lien. Secured by a separate property, this is where the smarter Gators will go. That private money is secured with a lien against a different property you already own because they don't want to be in a risky position. So they'll collateralize up to 150%. What that actually costs you. So premium rate, Gator lenders typically expect 15 to 25% in return for taking on the risk. And that's a return over just the time it takes to get the flip done, say 6 months. So think about that annualized. Heavy collateral requirement. These days, they've gotten smarter. They typically require roughly 150% collateral coverage on a separate property. And cross-collateralization, you're now cross-collateralized across 2 deals instead of 1. It can be over-leveraged, paying a premium for privilege. May as well go get a HELOC, and we can do them on investment properties these days. So you still have to find someone willing to do it. On top of the cost, there's no set market rate. Every one of these gets negotiated deal by deal. This could be a doctor or a lawyer with some spare cash that they want to park. You got to convince them your deal is the best spot for them to place their cash. You are dependent on finding a private individual willing to take this on, agreeing to their terms and working around their timeline. It's another chef in the kitchen. No standard market rate, dependent on a private yes. They can pull out at any time and their timeline, not yours. None of the pacing is in your own control, the way it would be with an actual lending product. So alternative 1, let's get into them. Rapid gap funding, how it works. Unsecured term loans stacked across multiple lenders, matched to your income profile. No lien, no collateral, nothing pledged against any property you own. Why it beats a Gator lending? Funds in 1 to 3 days once sequenced correctly, no property lien of any kind. Rates for strong credit profile land well under Gator lending territory. Alternative 2, this is a great one, 0% credit card stacking. You can go and do a double stack, 5 to 6 personal, 5 to 6 business, all in a 5-minute window. You got your introductory rates of 0% versus a Gator lender's 15 to 25% over 4 to 6 months. You got a 21-month period max intro on the personal cards, but it is typically 12 to 18 months on the business, and you got 0 collateral required, no property pledge, no lien recorded anywhere. The beautiful thing is these are building your credit, both business and personal if used responsibly. Every 4 to 6 months, you can go and ask for a limit increase and restack at the end of the 0% period. So these funds can liquidate directly to cover the gap at closing, making 0% card stacking one of the most effective tools available for a short-term down payment gap. Now, alternative 3, the HELOC. One of my favorites. The HELOC also puts a lien against the property you own. Same category as the Gator lending in that sense, but the difference is everything. Gator lending's a private individually negotiated, 15 to 25%. That's not even annualized, no standardized underwriting. However, a HELOC's a regulated lender, standardized underwriting, and the typical rates of 7 to 8% tied to the current prime, fraction of the cost. And the beautiful thing is you can pay back and redraw. You can use this to get in and out of deals without having to renegotiate, pay origination fees and closing costs every time you're using it. And there you go. They close in 5 to 7 days with some digital lenders. So the alternative 4, business line of credit. No real property involved. A business line of credit is tied to the strength of your operating business, not real property at all. No property you own gets touched in this structure whatsoever. So again, Like the HELOC, it's revolving credit, interest only on what you draw in many cases. Rates for most online lenders run well below Gator lending territory, roughly that 12 to 16% range, tied to business performance, not personal real estate equity. And the key advantage is zero real estate collateral required. Your properties stay completely untouched. And alternative 5 is your S block. Lenders only claim is the pledged securities, never you personally. 1.5 to 7% annually, great rates, nowhere close to what a Gator lender charges, a fraction of the cost. Use your portfolio, borrow against stocks or crypto without liquidating your position or touching real estate. That means your portfolio is still intact, gaining the benefits of the upside. Now, the side-by-side, Gator lending 15 to 25% rates plus, if you're lucky, lien on separate property, cross-collateralize, rapid gap funding, way below Gator rates, no lien, no collateral, lands in 3 days, 0% card stacking. Have those 0% cards for 12 to 21 months. These can land in your hand in 5 to 7 days. HELOC, 7 to 8%. If it is an LLC-owned investment property, it's going to be roughly 1% dearer just for the risk on site. Just for the risk they're taking on. It's a regulated lender, standardized terms, and they're now landing in 5 to 7 days too. Business line of credit also lands in 5 to 7 days, well below the Gator rates. Again, a beautiful revolving line that you can use, pay back, use again without origination fees and closing costs every single time, or negotiating with a random doctor off the internet. S block, 1.5% to 7%, securities only, non-recourse. Every one of these 5 alternatives either avoids touching another property at all or runs through a regulated lender at a fraction of the cost, and most fund just as fast or faster. Now, with a private lender, a random bloke off the internet funding your deal, or lady funding your deal, they're going to require an interview. They're going to check your track record over the last 2 years. They're underwriting you as an operator because they don't care about the deal numbers. If you're a great operator, you're probably not going to do a bad deal. Then they'll underwrite the deal. And by that time, 1 to 2 months has passed, you've lost the deal anyway. So where Gator lending might still fit, let's be real, there is a narrow case where Gator lending still makes sense, just not the default one most people reach for it in. So credit or income doesn't qualify. Your profile doesn't clear the bar for any of the 5 alternatives listed above. And to be honest, if you're getting hard money, you probably shouldn't be in real estate anyway if you're not qualifying for the 5 tool stack, because your hard money is going to be so expensive, they're not going to cover much of the deal either. And it's going to be very hard to find a profitable deal. You have real equity in a separate property sitting idle with no other use for it. To be honest, if you qualify for a HELOC on that property, you're getting way better rates and you can actually use it again in the future. A narrow case, this is a real scenario, just not the default answer most investors should be reaching for first. It's so narrow that it's almost non-existent, and I would say Gator lending's absolute bullshit. How we help with this? So this is exactly what we help buyers work through before they go find private investors. We look at your credit, your income, and what you already own, and match you to whichever of these 5 actually fits your situation. So we do a profile review, tool matching, and honest guidance. Worst case scenario, you're walking away with game plan and clarity on your next step. So if you're ready to close your gap, if you have a down payment gap to close and want to see which of these 5 options actually fits before you go looking for a Gator lender, book a call. We'll look at your numbers and tell you exactly where you stand. Head over to gapfunded.com/apply. Pretty simple there. Link in the description below. I'm Mick Wadley from Gap Fund. We're talking days, not weeks. Gator lending isn't a scam. It's just usually the most expensive and least certain way to close this particular gap. There are 5 better tools available to most investors, and now you know where to start. Faster, cheaper, safer. Let's go close something. And if you loved this video, if you adored it, smack the subscribe button and flog the bell. I'll see you on the next one.